I'm sure we've all heard the cliche 90% of traders lose money, yada, yada, yada. But have you actually seen someone put data behind it? I don't know about you, but I'm a numbers guy. I like looking at my average risk reward, win rate, this and that. And so when a study on actual traders who day traded multiple times and actually hundreds of times, and there's a select group that we're going to dive deeper into, when that comes out, which came out a while ago, but when we have that data, it's really interesting to look deeper into it. And if you are someone with the hopes and the dreams of becoming a trader and profitable, this and that, this might not be the most encouraging video, but I think it's interesting nonetheless. So there's actually been a couple of studies done, and the study that we're going to talk about specifically was published, I believe, in 2020. And what we're looking at is they took a bunch of traders from Brazil who traded essentially the equivalents of like futures that we trade in the US. If you're from the US, you may not be from the US and you're watching this video, but they took people who trade essentially futures contracts that we trade, like the mini S&P futures that you would trade here in the US. And they took people who traded essentially the equivalent there in Brazil and really wanted to see who was actually making money. The question of, is it possible to day trade for a living, is kind of what we're getting at and what they're trying to get at here. And there have been some studies that have covered this topic, but the problem with those studies in the past, which this study actually references, is that they found that around or roughly 20% of day traders were profitable. And you think, oh, great, that's actually better than the 90%. But here's the catch. They didn't differentiate between someone who took a day trade and people who took many day trades. And so their argument is that you come to a casino, the longer you stay, the more likely it is you're going to lose. And through the data in this study, that's actually what they found. Let's get into it. But real quick, before we do, I do want to thank the sponsor of today's video, Iron Beam.
Welcome to Iron Beam, the future of futures trading. With our cutting-edge chart trading feature and 300+ indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the Iron Beam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. Iron Beam brings the future into the present. Join now and augment your trading experience.
So they observed in this study over 19,600 traders beginning to day trade between 2013 and 2015. And they used at least 2 years to evaluate their performance. So we're not just looking at a hand-selected period where, oh, well, yeah, the market was just going up every single day during this 2-week period. And so, yeah, no shit, people made money. No, they're trying to get a better sense of people who have done this or are doing this for an extended period of time. Can they consistently make money and be profitable? Other studies showed that the longer you do it, the more day trades you take, the less profitable people become. But they found that small percentage who do make money tend to make a lot of money. So let's see if that was confirmed. This chart shows you the gross profits in black and in red, the net profits after fees. And essentially on the x-axis, so the bottom, you have the number of trading days. So over on the right-hand side, you've got people who are actively day trading quite a bit, and actually over 300 trades is the last data sets that we see. But what do we see with both of these two lines? Of course, it kind of makes sense that the gross profits and then the net profits would be less than the gross profits. We see these two lines heading down and to the right. And on the left-hand side, the y-axis is the fraction of day traders with a positive profit. So essentially, this 0.01 means 10%. So when we talk about 90% of traders are losing money, well, that's kind of your line. So once we achieve, or once you see 51 to 100 day trades, the probability tells you that 90+% of people are actually losing money after fees. Now, I will say that there has been a lot done in recent years to minimize some of the fees. So now you have, commission-free trading, which these things, if I were to go back, these were like this is a much more of a 2019 to present type of thing. I remember back when I was in college, I remember all of this news coming out, and it was a big deal because prior to that, there was commissions, and the way that we trade now with minimal commissions, if you trade futures, small commissions, is different, way different than what it used to be even just 5 to 10 years ago. Completely different landscape. Now, are they huge fees? No, but they can add up, and especially if you're taking a lot of trades, well, they definitely will add up. So essentially what this graph is showing us is that the more active someone is in the Brazilian futures markets, the less chance that they're actually making money. The people up over here are more like, oh, I'm taking a couple of trades, I take a day trade here and there, and I get lucky, and chances are, right, well, actually, this is well below 50% of people making money, but there's some luck involved, and that's kind of what that is signifying. Moving a step further, this is what's really interesting. And I'm going to leave a link below this video to the study, so if you want to check it out yourself, you can go ahead and check it out, read it, and all that stuff. It's a really short one. It's not a huge study. There's like there's 9 pages. It's not a big deal, which I love. I mean, I love a nice, simple study. That's all you can ask for. Here's a cool one. So what they did is they took those traders who traded over 300 trades, day trades, and they said, okay, out of you guys, who's profitable here? 47 of you are profitable. Great. We're going to take you 47 people, and we're going to dive deeper into how much money you're actually making, and then the variance and how volatile your income is day to day. And so they found is that the bulk of these traders were making less or right around Brazilian minimum wage. That is what that first dotted line is. That is the Brazilian minimum wage. There was this second dotted line right here, and that is the average wage of a bank teller in Brazil. Okay, these two lines, this is per day. This is if you simple it down to how much money per day would they make at the time. Minimum wage in Brazil, I think, was $16 a day, and then the bank teller salary or daily salary was $54 per day. Those numbers may seem very, very low. Again, this is going back to pre-COVID times, pre-2020 times, and you're also talking about Brazil, not the United States. But what you find is that there were only 8 people who were able to make, I would say, like really good money in Brazil day trading. 8 out of a study that we started with, what was it, 19,600? 8. Okay, 8 people. And despite those people making, good money, as we say, 6 of the 8 had very high variance. And so the higher up, essentially, on the y-axis you go, the more your range or your average day-to-day range. So these people down here, their income is much more consistent. Like, I'm making, let's say, a couple $100 or $100 a day, $200 a day, roughly in that range, give or take a couple $100. The people up here, though, all of these 6 people who were, don't get me wrong, they were making money. They were making more than the average salary of a bank teller, which I would imagine is decent money. Like, hey, this is my job. This is what I do, right? I don't need to have 16 jobs. I don't need to be making, this is not like just a side income. It could be, but they're making good money. In theory, you could get by in Brazil just fine doing this. Look at the variance. On the left-hand side, this is the standard deviation, the daily net standard deviation, essentially how much it varies day to day, how much your profits are varying. These are high. We're talking over $1,600 in terms of this. This is the lowest guy right here, which is around $1,600 or more. So between like $1,600 and over $3,000, this guy up here, in terms of your day-to-day variance. It's a lot. So you're not making $100 a day, $200 a day every day. Maybe you're making $200 today. Maybe you're making $1,000 tomorrow. Maybe you're losing $600 the next day. Maybe you're making $3,000 the next day. The next day you're losing $2,000. And I think this is what really gets what gets interesting. I think this, if I had to interpret this, I think that is a big piece as to why it's so difficult. It's because people, not many people, mentally can handle that in the first place. And I'm going to dive deeper in a future video talking about why it really is so difficult, I believe, to actually day trade for a living solely. But this study does a pretty good job at explaining or showing you how hard it really is and how unlikely it actually is that a lot of what you might see on social media is true for the majority of people. It could be really encouraging looking at this saying, hey, I'm going to figure it out. And don't get me wrong, I think it's different in other places and with different asset classes. You might find, or they might do studies in the future that options traders are, 1% actually make money. In this case, 3% made money. They might find that stock traders 8% make money versus this was a 3%. They might find that futures traders maybe 4% make money. It might be different depending upon the asset classes. But as you can see, when people say 90% lose is a rough guide, when you look into studies, which there aren't many like this, the numbers actually might be even worse for profitable traders. There you have it. I'll leave the links to the study, to the sponsor, and the other resources down below. And I'll see you guys in the next one. Peace.